Traders, welcome back. Hope you had a good weekend. So the market's been open and awake for a few hours now. Not much is happening. It's 8:20. The date is 8/20/2017. It is 7:21 Eastern Standard Time for myself. So hoping to find a trade or two this evening. But first, before I do that, I want to step back into last week and talk about a few trades that worked out really well for us that we made. The first one I want to review with you is right here. We're looking at it. It's a picture of this euro dollar on a 30-minute chart showing the exit that we took. So let me walk you through this, why we exited here and took 75 pips. Our entry was at 1774 at this green dashed line here. And at the time, the grids, the boxes, our 1, 5, 15 an hour boxes, everything was showing a nice resistance up top. The different time frames, this is a 30-minute, the different time frames I was looking at, we had a lot of evidence suggesting that there was a bit of a ceiling or a resistance here. So when price moved from 1774 to 1782, so 7-8 pips up into this region, I was happy to just go ahead and add to this position and head south with it. And what we ended up with was 1774 to, right at the figure of 1700, so 75 pips south. And once we started getting wicks on this 30-minute, we had 1, 2, a third dip. We did have, a spike down rather quickly here, and then price moved back up. And, once it started to do this, I was ready to take the pips off the table. So we did close the trade. And that was a good trade, just using the simple setups, looking at the grid and looking at the chart. But when you have all this evidence telling us, okay, well, let's try for a short south, we need to refer back to the grids and refer back to the charts to secure information for where we're going to exit our trade. And in this case, it looks like 88, 89, 86. In this area here, it started acting as a support. You put that together with the big figure from where we'd come from, and that's the meat of the move, more than the meat of the move, 75 pips there. Now, what I want to show you after this portion of the move is that we were able to go ahead and place another trade and stack onto this another 20 pips, not too far down the road, same day. So let's move forward down the chart and look at, here was our move. We went south. Originally we sold at 1774 in this area here. Trade came down, spiked. Once it came back up to the top of the band shade, that's where we exited and took the pips off the table here. Okay. So this is a 30-minute chart. So we have 30, 60, 1 hour, 2 hours, 3. So, 3-4 hours later, we have a situation, if we're paying attention to the charts, and then if we're paying attention to the grids, look at everything, how differently it's lined up now versus here. You see the boxes are scattered about, our zones are scattered about, our band shades are all scattered about. Nothing's really glued together. But when we give the market some time to adjust, recalibrate, come back into some sort of synchronicity, this is a situation that we wind up with. Prices started lining up 59, 59, 60, 60. So this is the top of a zone here. We have another situation at 49, 48, 49 with the red box at 49. And then if we look at our 30-minute chart, price touches the top, closes. We have a candle. It goes for a test again on this 30-minute chart. And with our hour box here acting as a resistance, remember these can act as resistance or support. You just have to look at the momentum of the market and see where the different ceilings are. So I was happy to go ahead and try a second trade. This was our first trade, and we closed out. So I was happy to try a second trade as it's retraced up. We have or at least it's suggesting to us that we have a possibility to short again, but with the exception this time when I took this short here, I'm looking at a maximum of 20 pips. I'm just trying to take some extra pips at the end of the day that the market is willing to print off for us, so we're going to take it. And if this situation, you're always thinking, if I make a trade and place a trade, if the market tries to drift against me, where is it going to go? And in this case, when we took this short here, right at this dashed line under our 1 hour box, if it breaks this 49, we know where it's going, and it's going to 59. So if it went up to 60, 20 pips higher from our original entry, I would have really considered adding to the position here. And then if the market drifted back to where we started, closed out both positions for a take profit positive. In this scenario, if we just look at the front slide frame, and this is a 4 hour of that same trade from 46. So, because we're always trying to piece together as much information as possible. So when this green candle touched the bottom of our moving average here, we're thinking, okay, well, we have evidence to go south. And that's what it did. Here was our trade, right at the 49 level. Roughly 20 pips later, there's 18 here, so 46, 28. We moved down. We cleared our 1 hour boxes, our 15-minute boxes. So as soon as it hit this cluster zone here for 20 pips, let's go ahead and add them up to the other 75 that we had on the table, and that's a good trading day. We're doing what we're supposed to do if we're using the grid here with the boxes, the support levels. It's giving us possible ceilings, possible supports, and just using this dance of numbers together with the band shades, we can produce accurate targets for our trades. So in the next video, I'm going to go ahead and discuss a dollar-yen trade that we made the next day. So hopefully we see some more trades like that this week. These are great. Good trading, signing off.